Okay, whenever you're ready.
Well, good morning, everyone. My name is Bob Jekyll. I have been in the mortgage business for over 20 years, and I am a newer loan officer with Norcom Mortgage. And you will see with the information you're going to get today with a couple of resources we brought in this renovation space, why Norcom Mortgage was such an attractive place to come to, given their commitment to the renovation space, not just in helping to acquire properties and see the possibilities in what a home can become, but also the logistics of servicing that from once the acquisition happens. That's the easy part. Now we got to turn it into the home they're looking for. And having a lender like Norcom that is so committed to the space, not only with the logistics in the back office and having the personnel, we all just met Leah, that's going to be part of this process now, but also knowing the commitment in the back office support to make sure that we're there through the process until the house is just the way it's supposed to be. And then we can let those homeowners enjoy the home the way they want it to be. So I just wanted to thank everybody for joining us today. I'm looking forward to hearing this information again from Charlie and Rob. And I can guarantee you between these two gentlemen, between Rob Philippone, our branch manager who has extensive experience and knowledge in this construction space himself, and Charlie Napolitano, who this is really where, if you ever wanted an expert in this space or wanted to get better and serious about renovation being part of your business program and your business plan, you could not have a better resource than Charlie. And I'm looking forward to working with our realtor partners in the business space that want to get into that rehab space and help more people see the opportunities in that limited inventory out there. So I just wanted to introduce myself. I'm looking forward to meeting you guys that want to learn more about it. If you have deals you want to talk about, but I'm going to turn it over to Rob and let him and Charlie take us the rest of the way and share some really fantastic information about our commitment to that renovation space. So I'm good. And Rob, the floor is yours.
Thank you very much, Bob. And good morning to everyone. For those of you that I may not know or have not met, I'm Rob Philippone. I'm the branch manager, one of our newer branches here at Norcom. I've actually started a branch. I've come on board at Norcom about a year ago. I've started a branch, and Bob is one of our newer loan officers. Very excited to have Bob. He's got a great reputation in the marketplace, and we're looking forward to doing great things together also with the board. We wanted to set a meeting today to speak a little bit to a product that I think we can all utilize, as Bob mentioned, in this lower limited inventory space, and that is the renovation and rehabilitation capabilities that you can do with not only the FHA 203K, but the Fannie Mae Homestyle and the other Reno products that are available. I'm going to let Charlie speak to really the real nitty gritty of this. He is our vice president in charge of Reno. So he is a backstop for me. He's a backstop for Bob. I as well do have many years of experience in the renovation space. I was a former regional manager for renovation and construction lending at prior lenders and prior lives as well. Charlie does nothing but this all day long. So even though I have experience, he is still a backstop to me. He's got many years in the business. So I'm going to not, take a lot of time. I know there's a lot of things that Charlie wants to go through. So with that being said, I'm going to turn it over to you, Charlie, and let you take it from here.
All right. Thank you, Rob. I appreciate it. And thanks, Bob, as well. Like these guys said, they're one of our newer branches here at Norcom, and they've hit the ground running. And we're excited to have you guys on board with us, needless to say. Now, I'm going to share my screen. And when you guys tell me you can see it, I'll be good to go. Can you guys see my screen?
All good. Looks good.
All right. So first, technology cooperates. That's always a great start to a presentation, in my opinion. All right, guys. So, hey, we're going to talk about my favorite subject, one of my favorite subjects anyway, and it's renovation mortgages, renovation lending. Like Rob had mentioned, I'm with Norcom. I oversee the renovation mortgage loan department. Basic 2 seconds on myself. 22 years in the business. The last half of that career has been focused on this particular product, this renovation mortgage thing. And it's grown in popularity, and it's grown and changed over the last few years. And I'll tell you what, it's so exciting for a guy like me that lives and breathes this type of thing, that we're in a position right now in our market where this has never been more important and appropriate, and a solution, more than anything, a solution. So we're going to talk about not just the home that we're trying to get them into. We're talking about the home that they'll actually move into, because that's really what they're really wanting to know, right? So let's get started. What's a renovation loan? You know, who knows whether you know what that term means or not, right? Maybe you know a rehab loan. Maybe you've heard that, probably, right? I'm sure by now, if you're in the real estate business, and I know a lot of you guys, and I'm sure you guys have been in some of my classes, you've heard this. You've heard of 203K by now, I'm sure. The running joke for the last 10 years has been, I teach this class in person. I teach a CE class on this subject. I ask you, do you know what a 203K is? I would ask the room. In the old days of the room of 50 people, 4 hands would go up. And the joke is 2 of them thought I was talking about their retirement plan, right? We know. Today, we kind of get it. It's not a 401K. It's a 203K. What is that? Listen, we're going to talk about what that all means. We're going to talk about how it applies to you. I'm taking 2 seconds here to give you a little quick rundown of Norcom Mortgage. You know, who you're here with today, who you're talking to. Most of you have to know us. We're in business here in Connecticut for 32 years. We're a direct mortgage lender. I think the most important thing to you guys to know is we make the decisions. We handle the underwriting and the closing and the funding of all of our loans, not just the renovation loans. We're very, very, very proud to say we had our largest volume month of business in the history of the company in October of 2020. It's very exciting to us. We are specialists in what we do, especially when we come to talk about this renovation mortgage thing. We own the transaction. We're the lender. We're the servicer. We handle this product from application through closing and through renovation. We're a purchase lender. I think Bob said it maybe when he started. Guys, in a time where we are today in this crazy world, right now in this market, the biggest mortgage market we've ever had in our history, right? By national data, 40% of the market today is purchase right now, okay? I just told you Norcom Mortgage had its biggest month in 32 years. You know, we're 70% purchase right now. I don't know if you guys even are aware of it. That's a huge, huge feather in our cap. We are dedicated to our real estate partners. Everybody knows that. I think Rachel certainly knows that. We've been partners with New Haven, Middlesex realtors for years, and we're also very proud of that. So very quickly through this one page here, you know, what I want to talk about with renovation loans before I get started with my slides, this is a mortgage, guys, like any other mortgage. It's not mysterious. It's not some kind of a crazy different product. It's a normal process. These loans have normal interest rates. I like using the word normal, especially today. Everything is not normal. These are regular mortgages. You know, it's not anything funky. They apply to every home buyer that exists. This mortgage can apply to. It's not something that you have to fit into some crazy box. Any property, I don't care who owns it, a private owner, could be owned by HUD, could be owned by Fannie Mae, could be anything, any property. And you know, this market, right? What can I tell you about the market more than anything? Let's use this little slide here as an indicator. Did you guys know 50% of our national housing stock was built before 1973? Yeah, I know you can't see my face on this camera. I was built before 1973. It's starting to show. I could use a renovation myself. But you know, really, guys, the houses are old. And if we're going to talk about inventory, is there not a more important word right now on the lips of everyone in the real estate business? I don't have to get into it and tell you guys the stories and the horror stories and how we have buyers that are on their 12th or 15th offer on a property and they still can't get it even though they're over listing price, right? This is your world. I know. So look, let me just throw some examples at you. Let's talk about inventory, right? Look at this house. Yeah, no one's like lining up to see this house, I'm sure. I mean, but look, this is an average house in our country. It's an average house in Connecticut. $266,000 at 1,800 square feet. This house was built in 1968, guys. That's the kitchen. That's the living room. It's not bad, but I mean, I can look at that carpet in the picture. This is from the listing and see that this is a beat up, kind of tired house. All right. Here's a house in Southington. This is as broad of a market as I've ever seen. Southington spans the gamut. I live there. This is a house that's $175,000 right now for 3 bedrooms, 1,000 square feet. Guys, this house is built in 1950. Has anyone been in this house in Southington? It's sold. It's sold in about 2 days. You know, here's some other examples. You know, this is what I talk about when I'm talking about renovation mortgages every day in my world. But it's really become poignant right now, right? Here's a house. This house is on Zillow for 180 days. There's not a lot of houses like that on Zillow, right? For 180 days today. Look at this house. It's in West Hartford, right? This one's in Simsbury. It's not a bad house. It's on the market almost 6 months. Why? Well, it's either overpriced or there's something wrong with it. And wrong with it might be there's something wrong with it. Maybe the septic in the yard doesn't work. Or maybe it just has that old kitchen, right? How many of these do we see on a daily basis? Yeah, we like it, but oh my God, look at the kitchen, you know? The grandma special, as they call it. 1978, nice house. Hey, look, this one too. Yeah, we like this house, but I mean, I can tell from the street that I'm walking into a problem. Look at the roof, right? We want to talk about the house they're going to live in. We don't want to talk about the house that's standing there.
Right now, all we could basically do is live within the means of getting a management company. Then we're hands off. We can't get involved with the loan at all and go that route.
Right. So, guys, here's a house in Wallingford, 1995. What's wrong with this house? I don't know. I have no idea. You know what? There's nothing wrong with this house. Maybe it doesn't have something. We're starting to talk about properties, right? Maybe it just doesn't have something that they wish it had. Or maybe it does have one of these kitchens. You know? Don't you guys love these visuals? This is, you know, that's the kitchen I think that my parents had in 1983 when I moved to Connecticut. I swear I think that might be my kitchen. You know, that house is out there. This is not Charlie's house from 40 years ago. This is literally a kitchen that one of my realtor friends was in last week. You know what I mean? So are these renovation loans the answer to the housing shortage? If you ask me or Bob or Rob, the answer is hell yeah, absolutely. This is how we expand your home buying options. This is how we take a home buyer who's ready to buy, guys. I mean, come on, in our markets, in our business, a home buyer who's ready to buy, who's qualified with credit and assets, and they are good to go. And we can't find a house to put them in. And we're going to spend another weekend driving around and making offers with a fully qualified buyer. What if you started to think about maybe showing some other houses that aren't everybody's ideal turnkey dream come true? Because you know what? There's a line of people. Only today they're lined up 6 feet apart. Ha, ha, ha. Boom, boom. There you go. Lined up in front of the house, waiting to go in and see it. And every one of them is ready to make an offer on this house. Maybe we could show them the house that's in the right location that doesn't have a line in front of it because it's got a problem, right? Maybe it's not even a problem. Maybe it's just tired or old, you know, or banged up. Right. This is from one of these articles, the lament of the first-time home buyer in almost every housing market. There's not enough entry-level homes that are move-in ready. So here's a solution: broaden the search. And this stuff is from, I'm looking for a date on one of these articles. It was like 2018, February 2018. This is before the pandemic. This is before rates in the twos and everyone making offers above listing price. As much as I love this amazing world we live in today in our real estate world, it is a little frightening to watch values shoot up like they are. But hey, why borrow trouble from the future? Let's just keep doing our thing. Why is this product becoming so popular? Aside from, oh, geez, I can't find a house. Listen, there's a lot more reasons why I've focused on this for 12 years. Did anybody ever see these initials? Does this ring a bell for anybody in the real estate business? HGTV? I don't know. Maybe you guys have heard of it, right? Here's why it's becoming the popular thing. That it seems that every single show on this network, you even look at the bottom left, even Vanilla Ice got in on the act. God will help us, Vanilla Ice is even in on it. It's every single thing that we're talking about today really seems to have some kind of a tinge to renovation or, you know, remodel or flip, right? I mean, it's what it's all about. I live with a wife who's an interior designer. Half of her business is involved with full-on renovations. So we see it everywhere in my house. It's what we eat and sleep and breathe here. You know, we've always talked about location, right? Location, location, location. The town, the school, the neighborhood. Hey, you know what? Today, look at that. There's a bunch of houses for sale. A bunch. You know what, though? As we starting to tighten that search into school districts and neighborhoods and stuff, suddenly, you know, very quickly becomes, well, geez, there's one house for sale. You know what? And of the one that's left, how many of them have an open kitchen that they're looking for? Well, you know, there may be 3 houses, but maybe only one of them is even an option. We can show them that these houses could all become an option if they have the right vision, you know. So let's jump into like some of this defining stuff. You know, what's the renovation loan? It's pretty simple. It's the financing to purchase as well as improve or repair in one loan application. It's one approval, it's one closing, one payment, and it keeps it simple. They can also refinance. And that's just, we'll talk about that for a moment. I know it's not your main business, but I can't tell you how many real estate partners of ours are in the middle of refinancing their houses right now with us. Here's another big bullet, guys. Renovations. When someone buys a house and they decide to include these renovations, did you know that they could be both required repairs or optional things? Number one, in my many years teaching classes and doing these presentations, the one thing that real estate agent partners of mine come up to me every time after a class and go, you know what? You really surprised me. I didn't know that it could be just improvements. I didn't know these could be optional. I was trying to stay away from showing people these beat up houses, these foreclosed properties, these HUD houses. I didn't want to deal with that. And then they realized they don't have to deal with that. They could still be talking about making more homes, more options for their customers. The renovation loan that we're going to do for the client is always going to be based on what's called the after completed value. That's the finished product of the house. There's no other product in the mortgage business that has anything like this. This is the magic bullet, so to speak, why this product is the thing that it is. It's based on the finished product. Before they close on their house, they're going to have an appraisal in their hands that shows the new value, what the house is worth with the work done that hasn't started yet. It's pretty amazing. We're going to show them more houses. We're going to increase the number of houses that are available. We're going to increase their options. We're going to increase your options. And in the old days, before this was everybody buying houses for more than listing price, I used to say to my partners, wouldn't it be nice not to have to show 10 houses tomorrow afternoon to this buyer? Why don't we, Rob said something to me the other day that rang. I loved what he said. And it was something like, why don't we, instead of showing them these 10 houses, why don't we tell them up at front how we're going to approach this? We want to show them 3 houses. We want to show them 3 houses. Any one of them could be the right one because they're all in the right place. They're all in the right location. Even if they're not in the same exact town, they're in the right location. It's what they want, right? So that's interesting. And I think HGTV has a vibe like that too. We're going to show them 3 houses. I can't remember the name of that show when they decide they're going to let them, they're going to pick a house and they're going to renovate it. It might be Property Brothers. Anyway, I digress. Guys, also, I'm going to just say this. The only thing I'm going to say further about refinance, you need to know that a homeowner can also refinance their home. If they're going to improve it, they can, or repair and improve, they can refinance it with almost no equity in their house. And that's an amazing thing. And I'll show you toward the end how that's possible. All right, back to this little house in Southington. All right. Remember that house? That's the basement. Thank goodness it's clean and dry. I mean, this house is in nice shape. Look at, I mean, they really have kept this house nice. Look at what this buyer did to this house. Look at that basement refinish, right? That's life-changing. I like to use that term with this kind of stuff. That's life-changing. What if you could say to this home buyer before they go into the house, hey, look, I have some examples I could show you of houses like this where someone bought it, rolled in the renovation cost into their mortgage. They still put down 3% or 3.5%. They wanted to put down 5 or 10, they can do that. It's like any other mortgage, but they put down 3%. and they rolled in the cost of this whole redo of this house. They're not leaving. That's where they wanted to live. By the way, their mother-in-law lives 3 houses down. This was about location, like most deals, right? How about grandma's house? We like it. Grandma's kitchen. It still smells like gravy. Guys, it's called gravy. My last name is Napolitano. It's not sauce. It's gravy, right? Hey, Philippone, can you attest to that? So
we'll take the rest of the presentation if we get into that one, Charlie.
that's like the election. We're not going to talk about gravy, sauce, or the election. All right, so guys, we like this house, but you know what? You can buy this one with a brand new kitchen. What if you were in a house like that and you had in your pocket like something like this? You could say to this buyer, "You told me you love this street. It's on this cul-de-sac. You can't." You walked in the kitchen. Your wife almost passed out. She hated it so much. Look at the kitchen that this became. Here's what they spent. Here's what it did to their payment. Oh, by the way, we could even give you the name of their contractor and their consultant too. We can make this real easy, real easy. We like this one, except for that roof. I don't want to deal with some roof that's going to, oh, wait a minute. You could buy that house with a brand new roof on it. You know what? That $10,000 roof, and that was a $10,000 roof because they used premium shingles. You know what it did to their payment? Rob, you know what it did to their payment. About $40 a month. It went up about $40. Their $1,500 mortgage payment went to $1,540. And when they moved in, a week after they got there, the roof got put on. They were out having lunch, and they came back, and they were able to get back in the house. All right, so guys, these are what's really important. The benefits. Shop by location. What a novel idea. Turn any house into the house they really were looking for. The renovation can be required or it can be optional. We're going to avoid them using every last penny that they have or blowing up their credit cards. How about we put 10 grand on a Home Depot card? Yeah, you know what the payment on that will look like? A car payment after the 0% interest. The mortgage is based on the finished product. $10,000 is like $40 a month in their payment. These are the kind of things you could say to a home buyer. Just these little bullet points, and have them won over to start thinking this way. Oh, you want to add 10 grand into this house? Well, listen, out of pocket, just so you know, at the closing table, you're going to need an extra $350. Oh, really? That's it? Roll the new bathroom into the loan. Who hasn't shown this house, right? One of these bathrooms recently. I mean, I know that travertine is dated. It's an old picture. I get it. My wife has been begging me to get rid of that slide. You know what, though? It's easier to sell this house if it had that bathroom than the original. This is that house in Wallingford. Guess what? That's what they were looking for. That's it. The house with the sunroom on the back. They predicted a pandemic, and they knew they would need to have out Thanksgiving in their backyard. Not funny. Don't joke about the pandemic, Rob. I told you, it's not funny. Guys, let me get into the nitty gritty, the real scary stuff. Let's talk about guidelines, and we have another hour to talk about these guidelines. How about this instead? Here's what you need to know. All right, this slide. This is it. Has anybody ever heard of FHA or conventional? This is why I say it's a normal mortgage. There is the FHA side of the world, the conventional side of the world. Within those worlds, each one has a product that just happens to be exactly like the product, only it has this feature. And the feature is we're going to include the renovation. And the only thing to do that makes this loan different than any other one is we're going to have a contractor that's going to give us a bid. And that bid is going to let us order an appraisal during our mortgage process that's going to tell us the after improved value. That's it. That's it. You've been taught, right? On the FHA side, you've got not only the 203K, which is this flagship product. That's what everybody knows about. It has VA, it has CHAFA. That's right, CHAFA, 100% down payment assistance program, 203K. There's one lender in Connecticut that has that program. You're online with them right now. We do the CHAFA 203K. We do the VA rehab, which is on hold from VA because of the pandemic, whatever. The 203K. On the other side of the house, guys, are the conventional loans. Fannie Mae, Freddie Mac. Why do we have the differences? Does anybody believe me when I say not every borrower is going to be an FHA borrower, right? Not everybody wants to have PMI forever. Not everybody is going to put down only 3%. We have conventional buyers for all different reasons. We have mortgage products that do renovation for every loan, every scenario. And on that topic, this is how what they do. What can you do with a renovation loan? That's the question to ask. Well, what can you do? What do they do? Charlie said something about repairs or upgrades. Can you do this? Can you do that? Can you do a roof? Can you do a septic? Look, you got the left side here. This is kind of like, as you read the list, I'm going to leave it up for a second. What does this remind you of? Reminds you of, yeah, I got the appraisal back and, oh, geez, there was a problem. There's a lead paint issue. There's a mold issue. There's something wrong with the septic. All that normal FHA stuff, the stuff you run into when this mortgage became popular. And by the way, it's been around 30 plus years, the renovation loan. It started as a 203K. When it started, it was about this. It was about being able to buy a house as is and making these repairs. This still exists. This is what a lot of these are. There's still plenty of foreclosed properties. I hate to say we're going to see more at some point, of course. We're going to still use this product for how it was created, which is, can I save this transaction? Can we find a way for these people to still buy this house? Yeah, we buy it as is. We include these repairs in the mortgage, and now they can close on closing day, right? And the seller isn't going to be asked to do these things. That's the crux of it, right? Now, again, I finished that list there. Now we're really thinking more about some of the other ways we can use these loans. And don't forget, this is not just 203K, it's Fannie Mae's version too, the home style, and Freddie Mac's Choice Reno, right? Kitchens and bathroom remodeling, adding living space. Full additions, guys. Building a detached garage, putting a second floor on a house, finishing a basement, adding an in-law, right? I said it twice because you know what? This is the time where this stuff is becoming really, really popular, especially out west. We're talking about the baby boomers, like we're talking about all different things. My job is to make you guys think about the things you didn't think about or hadn't thought of or didn't realize. That you could put a deck on a house. I told you, man, I don't want to see houses that don't have a big giant deck. I mean, I could show you a house that doesn't have a big giant deck if you were willing to hear. You could roll it into the purchase, hire whoever you want if he's licensed, let him build the deck, only it's going to be rolled into your mortgage and it's going to be $50 in your payment as you go. You bought the house like it had the deck on it, right? How about fences and driveways and things like that? I use my own example, but I'm getting old. I'm living in my house 17 years, but I have clients who have bought houses and said, I can't believe I didn't realize I was going to need a big fence around the back. And I can't believe I didn't know it was going to be $9,000 or $18,000 for a fence. You could finish a basement. You could just include the cost of appliances. You could only do that. You could buy a house and only include the cost of the appliances that the house doesn't have. That, they've already spent their money on the down payment. They've already spent closing costs. And, I forgot that they're going to need furniture and things like that. So these are things that can make or break a deal. And if I'm, one of my real estate partners, I don't know, man. I mean, I'm starting to sound like I did 15 years ago. Like I start to say things I used to say, like, man, I'd like to differentiate myself. It's how I made my name in the mortgage business. Boy, if I were a real estate agent, I'd be, setting myself apart by saying, man, I know this business inside and out. I'm connected to Bob and he works for Rob at the Norcom branch out there. These guys know this business. I know this business. Like, I have real estate agents, guys, and I know Rachel can attest to this because I've known Rachel for years and I've known a lot of you guys. I have real estate agents that they claim they call themselves the renovation mortgage agent. Like, this is what they do. And they're not walking around and showing dumpy houses all day. Trust me. Guys, swimming pool repairs. Okay. You can even install a new pool. Now, I'm not going to recommend as a real estate agent, you start showing houses saying you can roll a pool into this house because it's not going to bring back the same amount of value, blah, blah, blah. However, somebody that has equity in their house could easily refinance it and put a pool in there. It's another whole conversation, but understand maybe there's a house that everything inside the house is flawless, but there's this rundown, dilapidated pool in the backyard that you can't finance the house that way. You know what? You could finance the removal of the pool. I had a guy once fill in a pool with a renovation loan and put out a beach volleyball court on the side of his house. And I'm not kidding. He invited me to the Memorial Day party and I went. It was cool. Energy improvements, landscaping, major landscaping, guys. People put up full retaining walls and move driveways and reroute stuff around in a big jobs. But you can also do full tear down and rebuild of a house. As crazy as that sounds, it's not the same as a construction loan. This is a regular retail mortgage. And you can even knock a house down to the foundation and put up a new one. Put that in the back of your mind if you ever want to, talk more about it. Bob will be happy to get a phone call like that. We'll tell you what you need to know. Most important word in that whole chart is that it doesn't have to be broken, right? Doesn't have to be broken. Could be broken, could be a combination, but it doesn't have to be. All right. So now we're gonna talk a little bit about, all right, so if you're not sold on this idea yet as a real estate agent, either one of two things. You're sleeping, but you're signed in. I'm just kidding. No, seriously. Or maybe you've had a bad experience. Listen, I get it. I totally get it. This thing's been around a long time. Not everybody, because guess what? 10 years ago, there was probably 2 people in Connecticut that were the renovation guys. I was one of them. The other one moved out west. So Jack, it was nice seeing you. But I learned from my friend Jack Murphy. But the point is, you know what? It's not just Charlie now that Jack, my buddy Jack, is gone. It's every Tom, Dick, and Harry. It's every lending competitor that we have. Every competitor we have seems to say that they're also into renovation mortgages today. Because it's becoming a huge, popular thing. But the reality is if you're partnered with the right people, you can use stuff like this. I was going off on a tangent. I said, if you've had a bad experience, if you have, this is the time to revisit and work with experts that are really utilizing this to change the market. All right, so look, let's talk about the process a little bit. Now you're into this. Now you're thinking it's not a bad idea. I want to be able to talk a little bit about this intelligently. All right, that's cool. And you're not going to get everything you need out of this next, last 20 minutes of this. However, Bob wasn't kidding when he talked about Rob Philippone, the branch manager there in Milford. Rob knows probably as much about this business as I do, and whatever assistance they ever need, obviously they've got plenty of it when it comes to Norcom Mortgage. But the point being, we're here to help you guys. You only need to know the basics. I'm going to hit you with the basics, guys. When we're pre-approving somebody, we are pre-approving them based on what we call the total acquisition. And all that means is if they want a mortgage that has a payment of a certain number, if they want their mortgage payment to be $1,500 a month, maybe their budget is $300 grand. I don't know. I'm throwing numbers out there, right? That means we're going to pre-approve them for that amount. But guess what? Now you can show them houses that are 300, but you could also show them houses that are 280, that need a little bit of paint and love. Or maybe you can show them houses that are 260 or 250 or 220 that need a lot. Or, they already have their ideas. So the point is, we're going to pre-approve them based on the total acquisition, but your offer and your contract price is based on the purchase price. We're not getting into all of that with the seller. Seller's selling their house. They want their price. They're going to get their price. That's what we're going to agree upon. Okay. The renovation piece is built into their total acquisition, and it's separate. At offer acceptance, okay, we start the loan application and we get ready to underwrite the loan. We're doing everything the same, except for the fact that we're making sure they have a contractor in place and we're working to have him accepted. And that just means we're going to verify that he's licensed and insured, has some references. It's not the first time he's ever put on his tool belt. We want to make sure they know what they're doing. And that's part of the process. And it happens during the loan process. So we don't lose time. At this point, we decide whether or not we need a consultant. Consultants are involved in renovation mortgages when the job is more involved or beyond $35,000. Simple as that. So not every renovation loan has a consultant. Many of them do. It's one of the ways we come into play, and we have the relationships. We assign the consultants. It's part of our right as a direct lender. We don't assign contractors, but I'll tell you what. And by the way, if you really are interested in this, and this is usually the first concern of my realtor partners is, okay, well, where do they find contractors? You know, that's usually the number one question. And that answer has changed dramatically over the years. The answer today is better than it's ever been. It's, well, when you have a direct lender like Norcom based here physically in Connecticut, we're the leaders in this business, guys. We're here in Connecticut. That means the relationships that we have with the consultants and contractors are actual local relationships. So although we're not asking people to use certain contractors, because that would be illegal, what we are able to do is we're allowed to refer the consultant. The consultant is a direct link to the contractors. And we have all of the contractors, licenses and resumes on a database on our intranet available to our loan originators, our 100+ loan originators here in Connecticut. That's huge. This is what makes this business one of the reasons that it's a specialty of ours, but we really have control. The appraisal process during the mortgage process, right? Like any other mortgage, we want to order the appraisal day one, as soon as the offer's accepted. The only time that this can possibly be longer or take longer than a normal loan is if we're waiting on the contractor for his bid. We try not to. Again, we have a lot of ways that we don't have to wait. We can, again. But once we have the contractor bid, we are able to order the appraisal. It's always based on the finished product. Most important here, guys, is that this process, in many cases, is about the same as today's typical mortgage. We go a little quicker than the average Joe, but I can have a renovation mortgage closed today if I needed to within 45 days. Right? And that's not a lot of people that can say that. We want to close on the purchase contract date. As you know, we close as is with these properties, whether there's repairs needed or not. The work happens after closing. We're going to close on contract date. There's no disadvantage to your buyer or your seller of someone doing a renovation mortgage. They're not going to wait longer, right? And the renovation process after the closing is through Norcom Mortgage. If I haven't said it yet, I'm going to say it right now. One of the biggest advantages we have over our competition is that we own this process beginning to end. And that means after the closing, because we're a direct lender servicer and their renovation loans, we never sell the servicing. Customer is even making their mortgage payment to Norcom Mortgage. But what's most important is during the renovation piece, we're the ones facilitating the money that's being distributed, however we're doing it, whichever version. And it's the same people you started with. So you're still talking to your originator, who's still talking to me or my draw department to make sure that everyone is happy through the renovation. Because there's no better way to get a referral from someone who's been put into a house with one of these loans if it goes well. Because if it doesn't go well, I think you're not going to see new business, and that's what it's all about. So qualifying, I'll go through this really quick. Most important thing you need to know is it's like qualifying for any other mortgage. So that just means if we're going to qualify them for FHA, they're going to qualify for an FHA renovation mortgage. If we're going to qualify them conventionally, if that's what their profile fits, we're going to qualify them that way. But the loans work the same way. So the automated underwriting that a lender like us can use to approve, we know when we're pre-approving your borrower, they're getting approved. It's not an empty pre-approval or an empty qualification, pre-qual. It's the real deal. We've run credit, we've checked assets, right? So they can do 3.5% down payment up to 4 units even when it's FHA, and they can go as little as 3% down when it's conventional, because we can tie a home style renovation into a home ready, for example. Same on the Freddie Mac side. And even beyond that, guys, we do even have 100% financing programs that include renovation. And that's through CHAFA. So, all right. They require a 620 credit score, and this is an old, it's still the same today. It's an older slide. Little bit's changed in the world today with lending because of the volume and what some of the agencies have done with their scoring models. It's not quite as easy for someone with a 620 today as it is for a guy with a 680, right? It's kind of a little bit like the old days, but it's all right. Non-occupant co-borrowers are allowed on these loans. If I'm a real estate agent, that's something I don't ever forget, ever. I've seen too many deals that almost fell apart because someone wasn't aware of that. They could have a family member who doesn't even live here in the state. They could be in Oshkosh that can help them qualify and still get into their home. Any of the loans that we do with these are allowed to have a non-occupant co-borrower, as well as gift funds, right? How many times do we need a borrower to have some more money? They didn't know they needed that much money to get into a home. Nobody ever told them that. They don't teach them that in school. They teach them about trigonometry, which I still haven't used ever. And I actually quit the class, so maybe that's something to do with it. But back to mortgages. Gift funds, guys, completely allowed. Seller concessions, completely allowed. I still have customers that don't have a dime. I'm sorry to say, but I do have customers that don't have any money who are getting into a home, including renovation and everything, because they're receiving some gift and they're getting a seller credit. So all good. Rental income is used to qualify. I could have a first-time home buyer buying a 2-unit or a 3 or 4 unit house, living in one of them and using the 3 rental incomes to help them qualify to buy their first house. I mean, come on, it's amazing. The appraisal. There's one appraisal. That's a question I get a lot. We're not doing multiple appraisals. What about the one after? What about no. We do one appraisal, but it's got a contractor's bid in the appraisal, that the appraiser is going to use to identify the after improved value. Here's something that a lot of people don't realize. You know that you could actually close on a house where the utilities were not turned on for the appraisal? I mean, we've run into this, right? And then we're going to be in the winter. We're going to be dealing with this again. We can actually close on a house that has never had the utilities turned on during the appraisal because we would have put in a bid backup for what could possibly be wrong with that utility. And it would be included, the repair would be included. It's a lot to talk about in 5 minutes, so we're not going to. But these are interesting things. I'm sure you'd agree. FHA repairs, I mentioned in that previous slide, can be added after the appraisal. What I mean there is, you could have an appraisal come in, even if it was a renovation appraisal and something was missed. Maybe we didn't realize there was chipping paint somehow in the back behind the house or on the shed or something silly. That comes back from the appraiser and says, didn't anybody notice there's still this issue? Very simple. We go back to the contractor and we say, do us a favor. Would you please quickly add this line item into your bid so we can satisfy the appraiser, so he knows he can say this house is going to be fine because it's subject to that repair that he has built in. So it's a home run. It has saved many a transaction. It really has. I want to talk about something real specific just for a moment, because this is something exciting that could whet the appetite of a lot of agents. Here's a question. I'm going to throw this out there. I'm going to pretend I'm a realtor. Yeah, well, listen, Charlie, this all sounds great. And I've got these people selling their houses and they're selling for more than asking price. These guys want to include renovations. It's on the contract. It's on the offer. What if it doesn't appraise? I don't want to get involved in that. I don't think it's going to appraise with the renovations. And I go, well, I'll tell you what, here's a good answer to that. This is really the one occasion, a 203K specifically, FHA specifically, where you don't have to worry about value, actually. One occasion. So I'll tell you why. Let me show you a quick example. The home value that we're going to use to do this transaction is actually based on not just the after completed, but 110% of the finished product. And here's an actual example. Let's just say, this is a big one, but let's say that somebody was buying a house for $200,000 and they wanted to do a $50,000 renovation of this house. And that's exciting. Oh, awesome. I guess it's going to be worth $250,000 when it's done, right? They're putting down 3.5%. Your loan's going to be I guess the house is going to be worth $250,000 when it's all done, right? Yeah, in a perfect world, it is. And you know what? In today's market, more than ever. Yeah, more than ever. They're coming in, right, including the renovation, no questions asked. But I'll tell you what if that $50,000 renovation was including, 20 grand to replace a septic, or 15 for a huge roof. Like, house has got to have a roof and a toilet. What if we weren't going to get dollar for dollar value? This is answering that bold question. Am I going to come in short? Here, check this out. Excuse me. What if the house only appraised for 228? 228? Geez, Charlie, they bought it for 200. They're including 50 grand. How could it appraise for only 228? Well, the appraiser didn't think, honestly, that it brought back all the value. Well, guess what? If this is a 203K loan, an FHA 203K, that 228 value on that appraisal gets 110% added. It's actually worth, to FHA, they consider it worth 250, 800, which is more than the 250 that we needed. And that's why the bottom line there, I got to back up. That's why the bottom line is that this house could actually appraise for as little as $228,000. And this transaction still goes forward without a hitch. This is not the common scenario, but this is to prove that there's a big cushion built in here should it be needed. And most of the time I get my realtor partners go, oh, I kind of like that. That's pretty nice. Now you think about the person who's doing this tiny little renovation that's buying a house and they're just including $8,000 or $9,000 or $11,000 into the deal, right? But it's a $280,000 purchase. They just built a $28,000 cushion into the value of this property by doing this little renovation. You know what? I've made deals work because of that. So anyway, I don't want to get too heavily into that. All right, we're getting toward the end here, guys. We've got a few more minutes. I want to talk about a couple of more things that I think are probably on your mind, because I do enough of this and my presentation changes constantly based on, the feedback and what's important. So hopefully, I'm hoping that you guys are watching this screen and thinking, yeah, these are the questions I had. I'm going to leave time for questions, by the way. So I hope you've been writing them down. So the contractor, here's what's involved with the contractor. Sometimes my real estate partners say to me, hey, Charlie, I got a guy I use all the time. I mean, all the time I send them customers. He's licensed and he's insured. Can we use him? And I go, Barbara. Well, unless it's Fred. And I go, Fred, listen, you can use this guy. That's the beauty of it. Use your guy. Refer him. And then your deal is beautiful. They've got a contractor before they go see the house. He's in the back seat with a coffee waiting to go see the house with you guys, right? Listen, I have other realtors who say, thanks, but no thanks. I don't want any part of that, dude. Keep me out of the middle of this. Why are you telling me I know a contractor? I don't know any contractors, right? Okay. What's important, though, is maybe the customer knows a contractor, right? If they're licensed and insured and have references and they're okay, we're going to accept them. We want them to have some references. And if it's a big job, if they're doing a full 203K or a home style with a consultant, they better have some suppliers. They can't be winging it. And there's a lot of reasons for that. They're going to fill out what's called a contractor acceptance packet. All right. It's got a cover sheet that tells them exactly what to do. Guess what, partners? It's not something you have to worry about. We're going to educate the borrower and we're going to make sure this is in their hands so that when they get this to the builder, they know that we need his W-9 and they know that he's going to get an acknowledgement that talks about the way he's going to get the money. Not going to be any mysteries. And one of the things that we do over here at Norcom Mortgage in our renovation group is we help our originators, we help our branches to facilitate these details so that it stays out of your borrower's hair, out of your client's hair, and by God, it stays out of your hair. We're not going to, even if you tell us that you've referred the contractor, we're not going to come to you to have this guy fix his package. This is what we do, right? So, but I think what I'm really trying to show you guys is what's involved here and why we know, how to do these the right way, right? Contractor could be chosen by the borrower. His bid is going to break out labor and material. It's going to help us get that appraisal. We'll tell him whether we need a consultant. We'll work all that out, guys. We'll work all that. The consultants, by the way, are the home inspectors that you guys already know. But the consultants, they're the best of the home inspectors that you guys already know. Trust me. Most of them have been in my classes in the New Haven Middlesex classes I've done. You've probably met most of them. The important stuff over there, we'll talk about with the contractor. We'll make sure they're aware how these things go. This is why we don't have surprises, right? We let them know about the upfront money if there's going to be. We provide our people with these. How do you explain the upfront money? Like, we've got it together, right? We talk about the minimum and the maximum limits and things like that. What about if there's an overrun? What happens if there's an overrun? Yeah, we talk about the fact that there's a built-in contingency reserve. Relationship with the borrower. Yeah, you know what? This comes up. You guys know what FHA is like. If they're doing an FHA 203K, they can't have the same last name. They can't be related to the contractor. Okay. But you know what? Sometimes that's why we do a home style. That could be the main reason. Maybe their father is the contractor. This stuff happens. We talk about the draw schedule, the type of work allowed. All of this brings us to, the kind of the crux of it all. You guys came on this because you've heard of this product. You came on this today because you wanted to talk about it. Like, how can we grow the business? How can we help? Why is this such a catchphrase? Now you know, right? If you didn't know, you know. Why do you need to know us? I hope I don't sound like I'm bragging. I'm proud of the company that I work for many reasons, many reasons. But why is it important for renovation lending? I'll tell you why. We're the experts, all right? With over 30 years experience. I have, a dozen years just doing renovation, but the guy that owns our company, Phil DeFranzo, that owns Norcom, he's owned it 32 years. He's one of the first FHA lenders in Connecticut, and he's one of the first renovation lenders. He and I are connected, and I work for him because of my expertise in this business. But I chose Norcom after 28 years, after 19, 20 years in the business. I chose Norcom to come and expand my career as a renovation expert. We handle all of the mortgage products here at Norcom, everything, okay? And we are the lender. And if we have a real bizarre exotic product that might interest you, we handle those as well with the third party market. Like, we're powerful in a lot of those ways. So you can come to us for all of it, okay? So if somehow you have a client who bounces back and forth between a renovation loan and a regular loan, that happens sometimes. Sometimes it's got to do with the appraisal. Guess what? You're not going to have to leave and start over. You're going to stay with Bob. You're going to stay with your lender, and we're going to take care of the whole thing. I mentioned at the very beginning that we're a direct lender that handles the decisions and the servicing and all the important things about these products that make us stand apart. Our third-party relationships, those HUD consultants and contractors, we take care of this thing from start to finish. Like I've been saying all along, I've been hammering you guys, trying to hypnotize you into understanding, that's the difference. That's the difference. Most of our competitors can't make this claim. I don't care if they have a concierge that helps them. I don't care if they're not doing it themselves, and that's the difference. Our originators learn how to handle this product, and that's why. So that's how we're going to help you truly grow your business. I mean, listen, the business is booming. It's a wonderful thing. Everyone's buying houses, but at the same time, and again, I've never seen more people enter the career. So differentiate yourself. Use this to grow your business and become a subject matter expert. At Norcom, my originators, our people that are out there doing it, they have these resources, where all of the products are available to them. They have all kinds of great resources to show them what is going to work best for the client. And then they have the resource of my group that, we could literally be on the phone with a contractor or a real estate agent or a listing agent to help explain what's necessary. And again, we're happy to do it. My last slide, guys, is just to remind you, show the old houses that need anything. I don't care if it's a beautiful house on the shoreline that's perfect, but someone had the bright idea not to put AC in it when they built it, air conditioning. In this day and age, 2020, I don't want to go anywhere with that air conditioning. It's going to be 150 degrees in 5 years. Update the kitchen, update anything, add living space, right? Finish the basement, put up a fence, you name it, overcome. Yeah, I like it, but I hate hot pink. It's got to go. The seller's not going to make any repairs. The seller can sell their house as is. And that's going to help in a lot of cases. Target the exhausted stuff. I haven't had to talk about it all time on this call like I used to. You probably don't have as many exhausted listings because now you got 10 people that are like, I'm tired of looking at houses. Show me this one. Well, good. Show them the one that's exhausted because it's just got problems. Show it to them with a different mindset. Walk into the house and don't dodge, their glances when they see that kitchen. Have them prepared for it. Have them ready for this kitchen they're going to see and say, I got to tell you, if you roll this $20,000 remodel into it, I happen to have an example of a contractor bid here for someone else we did. And this is what it would do to the loan. I happen to talk to Bob about this all the time. I know that your loan's going to, you know what I mean? Take it head on and use it to sell the property. Create inventory. Literally, create inventory. Who can say that? Close more transactions and grow your business. And, ask every home shopper, guys, this is my favorite, seriously, when you're out there tomorrow, ask them if they'd be willing to make an offer on this house, the one I'm standing in. Would you be willing to make an offer if you could just roll in the cost of that kitchen redo? I know what it looks like. If you could just roll in the cost of fixing that leak in the basement, would you consider it? We'll make a deal. Listen, they know they've got a problem. The seller knows. We'll make a deal. It'll make sense. But we'll put the burden, quote unquote, of this issue or whatever it is, we'll put it on you and you buy the house. That's the way. Would you be willing to make an offer on this house if you could just roll in the cost of whatever? There you go. Make it the house that they're going to move into, right? In their head, give them the vision. Let's put it in their head. This is the house they're going to live in. And we're going to help them get there. So I hope you learned something. I hope you have some questions. Fire away.
Thank you, Charlie. That was great. We do see some questions in the chat box.
All right.
So first question is, how detailed does the contractor's bid have to be?
That's an excellent question. You know what? It really doesn't have to be that detailed. It has to be what they would kind of typically do. What a contractor would do on his letterhead, he'd explain what he plans to do. And he would give us what's different about this bid than most is that they have to split it into labor and material cost. And the easiest way to give a concise answer on that is we want them to break it up kind of section by section, maybe room by room even, and say, here's my narrative of what I plan to do. They're all different, but the simple answer is it doesn't have to be that detailed, but if it's completely vague, we would go back to him and we would work with him and say, hey, here's what we'd like you to do and make this quick change.
11:30.
Okay, another question. Is this program only for owner occupied or can investors use it as well?
That is another great question. I can't believe I didn't talk about that. What a remiss thing to miss. It's available for a single family investment property. All right. Only for single family, only through the Fannie Mae, Freddie Mac side, obviously conventional. FHA, of course not, it's FHA. But yes, it is available for investor, only for single family, and it follows the investor guidelines, meaning if they're going to do a single family investor and they qualify for an 85 LTV, they can do an 85 LTV renovation investment loan. So they're financing 85% of the house along with 85% of the renovation. So yes, there you go. Good question. Thank you for asking that. That would have been a big miss.
All right. And Charlie, will you be able to provide the PowerPoint so that I can send it out to the attendees? They would like the slides.
Absolutely. I have a version of it that's a PDF version. So it's without all the silly animations, but it's got all the same info, especially the important stuff. So yeah, I'll have a copy for you guys.
Okay, so anybody who's on the meeting who didn't register in the traditional way, if you would like a copy of that and the follow-up email, please put your email address in the chat. And there was one last question. Somebody came late into the meeting and she just wanted to know if the rates compared to traditional mortgage prevailing rate.
Yeah, I'm glad we get to talk about rate a little more. I only said one brief comment in the beginning that they were normal rates. So yeah, that's a good one. And I'll answer it best because, because I'm from quote unquote corporate. So I'll say it like this. Every branch has their own models in terms of what they're able to do, which is a very good thing. It makes us have the lowest rates on the street. The answer is this. They are very comparable to the normal rates. And what I mean is, let's say you had a borrower who qualified for a 2.875 30-year fixed loan because they have a 780 credit score. We'll give an example, or a 750 credit score. So that person qualified for a 2.875 30-year fixed conventional loan. You know what? Their renovation loan of the same caliber would probably be at around 3.125, maybe 3.25, maybe 3%. What I mean is maybe a quarter point, it could be 3/8. It's going to be very close in interest rate. Rarely will it be the identical rate, but usually just a little bit higher because there's a lot more in terms of the facilitating of the loan. So, but whether it's conventional or whether it's FHA, it's usually somewhere in that range of a quarter to 3/8 of a point higher. And you can use that out there on the street and be confident that that's what you'll end up seeing. Not every lender, though. Let me just preface that. I have competitors. I just want you to know. I have competitors who have done two things, especially during the pandemic times. They've gotten so busy that they don't, quote, have time to do a renovation loan. I don't know if there's any real estate partners on the phone who have run into this, but I've been told by people out there that the 203K, the renovation loan programs have been stopped during the pandemic. And that is as untrue a statement as can be. Some lenders have stopped to slow down the volume or to take other loans instead, which is their prerogative. However, it's not good for relationships. It's certainly good for our business. But the other comment I was going to make is I also have competitors who have jacked up the rate on a renovation loan so that if they're going to do one, it's going to be worth their time, so to speak. But when you're talking to the authorities on the subject, I know it was a long answer to a question, but the answer to take away is very similar in rate, slightly higher.
Great, Charlie. There was a question that just came in. I think it's a good one to cover, especially in this limited inventory market. Someone asked, because of the urgency of getting offers in quickly in today's market, are people losing out because of the process of getting the contractor bids?
That's another great question. I hate to be a broken record, but that's important. The answer is no, they haven't. And the reason for that is most of the time, I can't say for every time, most of the time when someone is making an offer on the property, even if they plan to do renovation on it, certainly if the house needs something, they kind of go into it kind of almost knowing that, or as soon as they look at the house and they leave, they kind of know it needs something. Before they make their offer, they work out their idea of what they're going to offer and all. The answer is, I don't need a contractor bid in order to make an offer. Certainly, we would want a contractor bid if there was a question of how much work was needed. We would want that during the inspection phase, right? During inspections, hey, wouldn't that be the ideal time to have a contractor get involved? So when the inspection is done, if there's a question or a problem, or better yet, we want to know what it's going to take to take care of this issue. That usually happens during that phase. So most of the time an offer is made on a house before the contractor gets involved, because the customer already knows what they are willing to stomach in terms of adding renovation. Does that make sense? I hope that answered the question.
Charlie,
Yeah.
Philippone, I just want to mention one final thing. I know we've gone long.
Yeah.
We spent a lot of times talking about our buyers and on the buy side of the equation. For your listings, I think it's very important to mention we also have one of the reasons I chose Norcom, to Charlie's prior point, we not only have the best people, these great products, but we've got a full-time marketing department. For your listings, if you've got those banged up listings that maybe look like some of those pictures that Charlie showed a little bit earlier, we've got some really slick software that can update your listings to kind of create an open house flyer. I would say go to Bob Jekyll for that. And with assistance of marketing and myself, we can get those in place for you. Do a side-by-side comparison. This is what the home is today. this is what the home looks like after you put $20,000 in. We can put that filtering software over your pictures from the MLS listing and show what a kitchen remodel would look like, show what those repairs would look like. This way, when you have people coming into your house and there's those objections that are happening in real time, you can break out that flyer to say, hey, with our partnership with Bob Jekyll and Rob Philippone here at Norcom, this is what not only the house can look like, but this is what it's going to cost you. $20,000 might be $80 a month. So we can do an as-is FHA loan and an FHA 203K loan. And you can kind of see that the difference in those payments to our prospective buyers are going to be very, very similar. So if you want those things on the listing side, absolutely.
That's a great point. Absolutely, really good point. And you made me start to think about it as you were saying it. To your point about the listing flyer, when you're doing an open house, we could really position the house so that everyone that walks through the door is aware of this, right? But Rob, even and again, a listing agent or a buyer's agent, I like to say sometimes to my buyer's agents too, I say, you know what, you could walk into a house now, even if the listing agent isn't aware of this, you are. And but when it comes to the listing, aside from the flyer and the before and afters, we can run even a video at an open house that has some of the bullet points and the important things on how to get it done. And to your point, Rob, a sample contractor bid from another job that was similar to this, we can really, and then we can even provide a home buyer who maybe this is their first time, and maybe it's their first time with a remodel as well. But because of our team approach, we can even point them in the direction of the professionals to make the work happen.
Indeed, Charlie. The final comment I'll make is that I wanted to talk about the listing side. We're in the partnership business. So we're here with our realtor partners to help you grow your business. We have the products, we have the expertise, the subject matter experts, senior vice president in these segments like Charlie to help to really deliver the whole package to you. So anything that you need as far as it relates to renovation, absolutely. I think we covered it here. We do this just as well in other spaces, which we're not going to cover here. But if you have something, you're not really sure, you need some resources, we've got guys like Charlie that are just as knowledgeable in other areas of the business. So we really want to help you build your business, grow your business, and partner with you. Thank you all. And that'll be my final comment. But if you want to talk to me, by all means, you can get my information. I believe it's posted here. If not, Bob can give it to you. But thank you very much for attending.
Thank you so much. And we had a comment about a question, how do we contact Charlie and Robert? I will put their information in the follow-up email that goes out so you're able to get in touch with them if you need to. And any other questions that you have, you can always follow up with them by email or phone once you get that information. So thank you so much for joining us today. Thanks to Norcom Mortgage. You were great. And this is some really wonderful information for our group.
Thanks, Rachel. Thank you for having us again.
Yes, thank you.
Yeah, I appreciate it. Thank you, everybody. Looking forward to working with you.
Thank you.
Thank you. Have a great day, everybody. Happy Friday the 13th. Hope it goes well.
Have a good one, you guys, and good luck with your new puppy.
Oh, thanks so much.
Yeah.
Bye.
Bye.
All right. Bye-bye now.